What's going on, everyone? So today I want to go over pips. This is very important in going along with spread and pips. You need this when going over any analysis and definitely before entering a trade. So a pip is an acronym for point in percentage. And those numbers that you would see on the right side of your chart, those are how currency is measured in the market. That's all I want to go into about what a pip is. Definition wise, let's describe it. So you have this chart, right? We don't trade on nanolots, so don't worry about this. This is where we trade from here and up. Now you can adjust your volume. This would be your lot size. You can adjust your lot size to whatever number you want. So it could be 1.11, 0.12, etc., any number you want. To keep it simple, this is just a basic format of it. So all I want you guys to worry about is you don't have to worry about the names. These are the units that they move in the market. You could just focus on these two right here, volume and pips. These are lot sizes. These are what the lot sizes mean per pip in the market. So let's use Forex as a video game, and the pimps are your points that you want to get in the video game. You want to get a high score. Let's do it that way. So the lowest lot size you can trade on is a 0.01. This is pennies. Every pip is 10 cents. Okay? You can also trade at 0.03, 2, 4, 5, 6, 7, 8, whatever number you want, but do the mathematics for this to move over here. So if this is 0.01 and that's 10 cents, 0.05 would be 50 cents, and so on and so forth. So for here, if it was 0.10, it's $1 per pip. If it's 0.50, it's $5 per pip. Okay? One lots, also known as the standard lots. This is where most people want to be, $10 per pip. 10 pips gives you 100 bucks. Okay? But those are the lot sizes. Those are the pips. Per pip towards the lot size is this. Okay? So if you enter in on this, every pip, every point is $1. If you enter in on a lot size, one standard lot size, this is $10 per pip. Okay? So let's get into it on a chart. So here we have G Chef. Let's put our 100 EMA in there. Okay. Let's see if we can find a nice pullback. Okay. Right there, right? So when you're in trading view and your analysis is coming together, and let's just say we were looking at this sell on G Chef, right? I'm not really comfortable with that. Is it 5 minutes? Okay, there we go. Right? You can come to your tool section over here, click this ruler, the measure app. Okay? This is how you get your stop losses. So up is always going to be, because up is in profit, down is negative, but don't worry about that. That's just how it measures. So stop loss above this wick would be 18 pips. See that right there? That's the pippage. Down here, 20 pips. Okay? Then you would come back to that same graph and start to equivalent how much you would make and how much you were risking money-wise, which I don't advise. It's better to just look at pips rather than focus on the money. Because if you don't focus on the money, it makes way more sense. The anxiety is completely separated from it. So again, focus on the pips, focus on the points. Don't worry about the money because that always changes, but remains the same. And what I mean by that is the lot size will change, but your method and your way of trading will never change. Only the numbers and cash flow will increase or decrease. We want it to overall increase and manage it well. That will always change, but the way we go about it will always remain the same. Once you master that, you completely learn the whole mentality that is very much needed in this industry to move forward. So you enter in at 100 EMA, you want to see how much pips you're risking. Stop loss above the high, so we're risking 20 pips, 15 pips, and it would be down to the low, that's 40 pips, okay? If we were taking this trade. I'm not saying this is a trade at all. So we have that. I would strongly advise pausing the video at the beginning to go over all this, take notes, write it down, screenshot it, whatever you'd like to do, and just keep it for yourself and just start playing games with yourself. So spread. This word means the difference between where we can enter a trade and where price is currently. These numbers move in increments of 10 to 1 ratio, meaning 19 would be rounded up to 20. 10 to 1 ratio, that makes 20 equal to 2. So wherever a trader chooses to enter their trade, it will be 2 pips from where price is, meaning 2 spots from where price was at during the time of entry. Now let me explain what that means. I know that sounds very confusing, but in the background, we have MetaTrader 4 opened, okay? This is downloaded to my laptop, and all I have open is the pairs. So I have all the pairs that have low spreads, okay? You can do this on MetaTrader 4 too on your phone. Just go to the quotes and look at all the quotes and look for the word spread, and you'll find it right over here, these numbers. So this means 10, they're all double digits and up. 10, 12, these are all 1 pip, 1 pip, 15, 1 pip, 1 pip. These are all 1 pip. So according to this, where price is at right now, if we're here and the spread is 20, we want to enter in here, it's gonna put us 2 pips away for where we want it to be. If spread is 20 or 10, it's gonna put us 1 pip away. So our entry will be over here, 2 pips there. That's what spread means. So if we, what did I do there? Hey. Sorry, guys. Just back. Okay, yeah, great. So going back to the spreads. So we have GBP USD, with the cross, second one, 13. So that would be 2 pips away, right? So we go to GBP USD. We have our analysis together, we're waiting for zones to be met, etc., etc. Let's just say I was entering in over here. My stop loss would be 10 pips. I know the spread is 13, or if it's going to be 20, okay, so it's going to put me 2 pips away. So if my entry was here, it's going to put me 2 pips negative. It will always put you negative before it puts you in profit, okay? Keep that in mind. So if I was going in for a sell, it's going to put me here. If I was going in for a buy, it's going to put me below my entry. They'll always put you below or above your entry, opposite of which way you want to go. So if you're going in for a sell, it's going to put you in negative for the sell. If you're going for a buy, it's going to put you in negative for the buy by the spread. So this is where the broker comes in. You want to find a broker with low spreads, and we can recommend them to you once you're all ready to sign up for a broker. Don't worry about that for right now. So let's go look at some more. So now let's look at the first green one. That would be EUR Chef. See how the spread is 35? That means 4 to 3 pips. Now, we're not saying at all that you cannot trade that. You can trade that if you like. Just understand that with your method, you're going to be risking more pips. So if price is here, when you enter your trade, I'm gonna give you guys a better outcome. In the higher time frames, 4 hour. I'll make it clean. Okay, so if you were entering here, right? This is your 10 pips. Spread is 40. So you're going to be 4 pips negative. Then your pips will be, then your trade will be overall 14 pips. Why? Because you have a 10 pip stop loss. Spread and the price is going to move with 4 pips in between them. So if you have a 10 pip stop loss, you really have a 6 pip stop loss. That's why we trade with the certain pairs that we go with. So with that being said, let's come back to this. All these pairs down here, 40, 40, and different brokers have different spreads. I'm just showing you mine. So I've narrowed down all the small ones. We look at all these pairs because they just have low spreads. And low spreads are always better for your trades because that means you're risking less pips. So if I'm risking 1 to 2 pips with a 10 pip stop loss, it's like 8, 9. I can put 12. That sounds about good. Now for long terms, again, if your entry is phenomenal and you like the trade, just keep in mind what you need for your trade to follow through. So if you're trading EUR Chef and the spread is 30, 40, that's 4 pips. Just remember that. Remember that when you're entering a trade. So if GU, so let's say GU spread is 10, right? And U Chef is 40, right? That means 1 pip, and this is 4 pips, okay? That's what spread means. So you look at your pair, you look at your spread, you go look at your trade. You want to go see it from where you're entering, where you're risking. So you look from here. This would be a retest of this high. I'm not saying this is a trade to take. I'm just saying this would be a retest of this high. So you would enter in right around here. The spread on this pair is 40. So you would have a 10 pip stop loss, now 14, because you know that spread is high and you understand that. So make it 15, whatever you want. And then your TP would be at the low, et cetera, et cetera. Okay? If you have any questions about pips, please let us know. I really hope this was helpful. Please write this down in your notes. Take whatever notes that you need from this. Let us know if we can be of any more assistance. Because when we were starting out, we really didn't have a good grasp of pips. So Forex is just a big video game. You want to get a high score. If the whole momentum is 10, 100 pips, we don't need all of it. We just need good, proper risk management. And we'll be able to snipe trades and collect our pips the right way, not in a greedy way, not in an irrational way, the way with finesse. See you guys later.